Do I have a choice at this point?
I'll bring you the water.
I hope everybody can hear me fine.
Show, let me give you the comments, and I'll get to all the people.
Just want to make sure everybody hears us well.
Yeah, let me.
I hope everybody can hear me fine.
It's good?
Yeah, I think it's fine.
Perfect. Enjoy. I'll get you other people.
All right. Come here. Come here, Josip. All right. So, welcome everybody to Ownership Report. We are doing a live report here from Solana Summit Germany. And today, at this moment, I have Josip here with me, part of Superteam Balkan, and we're just going to talk a little bit about ownership coins. So, Josip, what do you think about MetaDAO and the whole ownership coin structure? I think I've kind of heard you talk positively about it. So I'm wondering what your thoughts are in general.
First, MetaDAO has been live for like 1, 2, 3 years in total.
Yeah.
Since inception.
Yeah. Ownership coins.
Ownership coins.
It's like 1 year.
Yeah, exactly. So before the ownership coins, I was like hating it with passion, I would say, because it was like such a jargon lingo that I hated it purely because of the lingo. I was like, yeah. But the ownership coin was like okay, this makes some sense moment. That is a good part. Overall, I feel like MetaDAO and ownership coins is a thing that can bring new experimentation on Solana, honestly. But I also feel like it's meant for a very specific set of projects. But I also love the idea that if a project that is not fit to raise from MetaDAO can easily be liquidated. So
you actually like that feature.
yeah, as in, and from the founder's side, no. As a founder, I want to have my money, right? And I want to make sure that, like, yeah. But it is a feature that helps iterate on innovation until you hit the sweet spot. Like the ideal project that I see from MetaDAO is like the JurassicFi. Highly experimental. It has a narrative that people can stand behind. It can move, it can do whatever, and it feels like it has to be like more community focused rather than institutional. So projects like those hit the sweet spot. Those that don't get liquidated, some of them may be unjustly in a way, but the user is always protected. While I feel like in 1 year we're gonna see MetaDAO in a much better place, and much more people are going to actually understand how it works, why it works, and what's the benefit.
So I think one thing you mentioned is that you hated it with a passion until it was just futarchy. But, you know, decision markets are still like a major part of it. So how did that...
Yeah, so I hated it with passion, then I loved it briefly, but now it's like a love and hate relationship. And regarding like governance,
governance, like decision markets themselves.
Like the governance is part that I haven't really like gotten in too much yet. Like the part that I really care about is like forming capital, so to enable founders. And the second one is that the users are protected, like the retail. Like that's the most important one. Governance is like less sexy than anything. It's important part, but I feel like it hasn't really been cracked yet. Like we've seen some really dumb proposals that maybe passed. We've seen some good proposals that failed, and the opposite. But then again, even founders, even if there is no retail and governance and investors and the board, founders can still make dumb mistakes and miss on doing good stuff. So it's a natural thing.
So what is your biggest criticism of MetaDAO?
Of MetaDAO?
Like right now, of the whole structure.
The biggest criticism is on the founder side. Like I mentor a lot of startups. I can't recommend MetaDAO to a lot of them. It has to be in a very specific stage with a very specific narrative. And also the biggest obstacle for me right now is that this is a feature, not a bug. But IP is fully owned by the DAO. Like I have a game that I want to put on MetaDAO because it's a super cracked game. It could be community owned, but the game IP should be maintained by the creator of the game because they want to license the IP and so forth.
That's possible through MetaDAO.
I've heard, okay, maybe now there's like a lack of understanding me there. I asked one person that is deeper into MetaDAO and I got the wrong instructions. I'm going to ask you on that part. But I still have to understand like the IP structure. Even outside of the game example, I would personally be afraid if somebody else holds the power of my IP. But then again, there's like the mechanism where if for some reason MetaDAO is not fit, it could always be liquidated, the IP is returned. So it's much easier for me to recommend because if you have MetaDAO, it's going good. You don't care if the IP is there because you have everything else lined up. If it's not good, the IP returns back to you. So you don't get other benefits, but it's, it's the usual stuff.
I think that would be a very interesting use case of seeing the IP being licensed out to somebody. Maybe it's not possible today. Like that's a complete possibility. I'm not a legal expert, so I can't speak about that. But it seems like it should be able to be done.
It looks like it should be. But let's say you're a game. You want to license a publisher to publish your game on Steam.
Okay.
And you would have to sign the deal as a Cayman Marshall Islands entity, which is a little bit tricky, right? So ideally, I would own the IP as a creator because...
No, I think the way you would do it is probably have somebody that represents the company and sign it on the company's behalf.
That's what I thought, as if can the DAO delegate a person that like handles that specific set of IP?
I think it should be. Maybe not.
That's something that's still like that's part where like MetaDAO is still highly experimental. Like we haven't covered all the cases. Like I want to see a future where either MetaDAO or some sort of like a copycat of MetaDAO. That's the same thing, but for creative projects. Like I want to see a Kickstarter where somebody is raising money for a board game, and if they raise money successfully, and then sell the board game on through board game retailers or video game, they sell it on Steam. Like the money goes back to the main treasury, the people that raise. So I want to see a MetaDAO mechanism in Turkey for creative projects. But then again, it's kind of uncharted areas, and how do you manage the IP? Do you really need to spin off a new legal entity for like every project? There's still a lot of room for experimentation.
Vulcan, let me know when the new person can come. 5 minutes of time.
Vulcan gave 8-bit water. Vulcan noticed that penis was thirsty.
Yeah, I got some water. Vulcan gave me some water because I was thirsty. But yeah,
careful about that.
Yeah, I don't know if that's the right spot there. But yeah, thank you, Josip, for coming here today. Thanks for this short little chit chat about MetaDAO and ownership coins. That was actually super interesting about the whole creative stuff. I would love that to be more explored on the MetaDAO side. So I hope Profit and team, you guys hear this.
Yeah, maybe inaugural meeting in San Francisco, right?
Bro, yes.
I saw Rinko was looking for a honest skeptic.
Yeah, there you go. Yeah, so we can
go over the next one.
Yeah.
Cheers.
See you. And next up, hey man. Yeah, I'm wearing the mask now. So.
That's fine.
Yeah, so next up we have Fabian, or Xerox, is that how you pronounce it, from Tributary. He's he's doing a Solana protocol of like, oh fuck, can you explain what you do?
Yeah.
To the audience.
Absolutely. Tributary is a protocol that's for pool payments. It started with the most primitive approach, which is subscription payments, fixed amount per month, for instance. It has pay-as-you-go, which is useful for API providers and AI providers and milestones. Kind of the very simple, obvious approach. That's what Tributary currently does. And now that that is out in the wild and people are using it, I'm going to the next approach and move over from pool payments towards self-driven, self-driving money, basically.
Cool. Yeah, I think we've had Fabian on and Ownership Radio before, and it was always a pleasure. So what do you think about MetaDAO? What is, I think you've kind of come around to it and found it very fascinating. I see you active in the ownership community chat. So I'm wondering what made you realize that MetaDAO was, something that could be useful for a project.
No, that didn't take too much time, because I already knew DAOs are essentially the right way forward.
Okay. Interesting.
So I come from a DAO background.
Okay.
Like in the last decade, I've been working on different DAOs, including some that are on their own L1. It was called BitShares. Then there was something called Steemit, and then there's a couple other forks based on the same tech stack. I've actually been one of the first people to actually be hired by a DAO directly. So I was an employee of a DAO back in 20. I think it was between 2017 and 2019. I think about that maybe. So having companies run natively on the internet, this is pretty much what brought me into crypto to begin with, and that was 2015-ish. Yeah, that was earlier actually. So it was clear to me that since we have the internet and we can do automated payments and automated businesses, a DAO or the company itself being run on the blockchain makes totally sense. In fact, we called it DAC back then, a decentralized autonomous company. Because
really?
We did it because you have a product that earns money and you can see that as revenue, and it goes into a treasury that's managed by the blockchain itself. And you can hire people and have expenditures all paid by the treasury, and that's pretty much what makes a company. And then, well, as time moved on, it became a DAO because it's more generalized. So a DAO being the future was very clear for me that this is the right way forward.
And did you have any doubts about the exact or ideas about how the DAO structure can function? Like, did you find decision markets something that, like, to me, when I saw decision markets, it just kind of all made sense. Like the market decides things, and it just all. Did you have that moment as well?
Yeah. So we did have voting and governance back then as well, and it was all stake-based, whatever votes the most, and that was pretty much one of the root causes why the project didn't move forward a lot, because incentives and stuff.
Interesting.
And the way that you can vote against proposals and for proposals with your stake and face in the game, that is pretty much what kind of made it obvious to me that this is the way forward. And it's the only way forward, really. If you want to do on-chain governance with a token and an ownership coin, I don't think there's a better approach right now.
Yeah, and I think that's our time right there. So Fabian, thank you for coming on today. For anybody listening, go visit Tributary, and I guess I'll talk to you soon.
It was a pleasure chatting.
Yep. Goodbye, brother. No, it's fine. Okay, next up, we have a very special guest. We have Milian from Arceum. Welcome, man. How you doing?
Thank you, Venus. It's a pleasure.
It's always a pleasure to talk to Milian here. So Milian, I know that you are very MetaDAO pilled, or you like MetaDAO structure. Could you tell us a little bit about how you came to that conclusion, or how you found MetaDAO, and why you think it might be good, and maybe some things that you don't like and other things that you do like about it?
That's a good question. I think I first got introduced to MetaDAO by...
Speak a bit louder so that the microphone...
Yeah, I think I first got introduced to MetaDAO by Hunt, one of my coworkers at Arceum.
Doing the Lord's work.
Yeah, I mean, he was chilling this, like, we were living in a hotel room together during ETH Denver, I think, like, not last ETH Denver, but the last one before that, and he was speaking about MetaDAO all the time. So... He kind of shielded me. He's been a maxi MetaDAO guy for a long time, a foot hard. So yeah, that's how I first got introduced to it. And when he first told me about it, like, it didn't click to me like instantly, but over time that I saw this coming up more and more, and he talking more and more about it, that's when it clicked for me too. I think it's both decision markets and the way they do fundraisers. It's a very fair way of doing things. I think tokens, the way they work today, most of them operate in a very broken way. So I think MetaDAO is a very good antidote to that.
Yeah, I mean, absolutely agree. Do you have anything that you don't like, or something that you would want to improve upon that, upon the current structure? Like, a lot of people say that they don't like the liquidation system, or they don't like how everything can be put up to proposals.
Yeah, no, I mean, I think we talked a bit about this earlier, but I think based on what I've seen is that MetaDAO has become more and more flexible for projects' needs. So I think that's good. I like decision markets. I don't really have anything special to say. I don't have some big criticism. And if I do, I'm sure you have something to say that's not right.
No, I want to hear you out. I want to, like, the point of this is to, hear everybody out and maybe try to have a quick conversation about any worries that you may have about decision markets.
Yeah.
But
like, I hear that,
have you ever traded a proposal or something like that?
I've traded a number of proposals.
Oh, nice.
I did the first number of proposals, I'm pretty sure. Everything went smoothly. I think if there's a proposal, if there's not much liquidity, I mean, in that case, it can be pretty swayed, right?
Yeah.
I mean, like how...
It depends. Well, you're trying to price the outcome of the proposal.
Yeah.
And so liquidity doesn't matter that much as the actual price of the outcome.
Yeah.
I think also one thing that kind of connects to decision markets are, like, there's so many of these information markets out there, and we talked about this not too long ago, how there's just the whole design space is extremely interesting. Like, I think one very interesting one is it's Bench to me, with their what's exactly, so could you explain what that is, what Bench is, and how maybe they use Archeum?
Yeah, sure. So Bench is like
And like maybe you could talk also about how privacy can be very useful
yeah.
for markets in general.
For sure. Yeah, so like first, just to introduce Bench. Bench is essentially almost like a bounty marketplace. So any person can create a market where they're looking for specific type of information, and people that have a lot of insight and knowledge about this can stake capital, do capital weighted bets on, okay, I think this is very relevant to your market. It's a good fit for you. I know a lot about this, and you put capital behind your beliefs. So it's just a way for people that want private information, private valuable information, and keep it to themselves. And they use Archeum for keeping the data private to the market creator. So the market creator preserves the alpha. When it comes to like privacy in markets in general, like I think we can talk about different types of markets, like opinion markets. I think it's a very obvious one. I mean, completely different market here, but let's say if you want a proper opinion market, you shouldn't be able to see what everyone else votes, because then you get biased by other people's opinion, but not your true own opinion. So if you can like encrypt the odds for the opinion markets and then reveal at the end of the market, that's how you get like more proper opinions without being influenced by what you see on the screen. For fundraising, you can use sealed bid auctions to.
I think that I'm really excited about sealed bid auctions.
Yeah.
Like the way that Crafts did it was particularly interesting to me.
Yeah, so there's many ways to do it, but sealed bid auctions, it's a very new one. Like on chain, we haven't really seen it. So with Sama had one sealed bid auction for their own token.
Okay.
But that's basically the only one we've seen, and then Crafts recently closed another raise. Sealed bid auctions is an interesting way to get a fair valuation that the market is willing to pay.
Yeah, and it's also enabled by privacy.
It's enabled by privacy, yeah. So you can't see what other people think is a fair valuation for the company, and the market essentially decides the valuation that they're willing to pay. So a good way to find fair price discovery there. What else? Prediction markets. You can have encrypted resolution. This is something the Milian team is working on. So essentially, with UMA oracles today, you have these UMA whales, and they can sway the markets into their own favor in unclear markets. If there's like an unclear resolution. So what we can offer there, like what privacy can offer there, is that it can encrypt the voting in a dispute. So none of the voters in this dispute, they can't see what others have done. So if everything is public, then they can see, okay, this is close. I can swing this vote to my favor, and we can win this market. Yeah. Because these UMA whales are often participants in the markets themselves, so they have an incentive to be right. But if they're wrong and they do what majority doesn't do, then they get slashed. So if you just encrypt what the other whales are voting, then you get a more manipulation-resistant oracle. So I think this is there's plenty of new design space for information markets in general and privacy, and we're starting to see the first things come out of it now.
There you go, guys. That's it for this segment here. Thank you, Milian, for jumping on. And we have our next guest. We actually have Erik from Bench, which is perfect. We were actually just talking about opportunity markets. So I'd love to go a little deeper into how you think opportunity markets can, shape the way things work, and how they work. We just had Milian explain what they are, so you don't have to explain the mechanism. But for all of our audience, we'd love to see,
I think one thing that could be interesting is going more into the motivation on why we are building opportunity markets and
let's do that.
the value add I see with them. And the general idea is to improve the quality of decisions of the people that are making decisions.
Okay.
And the best way to do it is to provide them with better information. And there, I think the clear path is one thing that we've seen with prediction markets is that capital-backed information provides more accurate and has more accurate results. And I mean, decision markets are also building on top of this thesis. And we are using the similar thing or the similar thesis, and then the one key difference is though that we want these markets to work for the decision maker and to work for the person in power, so they get better information that is capital backed and then make better decisions. And I mean, ultimately, this is I think also the way that decides how our society or how we as a civilization are moving, is which decisions are we making, which decisions.
So basically, from my understanding, these markets are basically decision markets without the outcome being binding.
Yes.
Is that true, or am I missing something here?
It's almost true. I think looking at it from the top, this is kind of the right way. I don't know if there was one article released by Robin Hanson. It was one day after his famous decision markets and future key article, which was Fire the CEO Markets, which is going really deep in this thesis of markets having an advisory function rather being as consequential as decision markets. So we're really getting the core point, I think, that is correct.
Yeah, so you guys are heavily influenced by Robin Hanson. Did you guys read his paper and stuff like that?
Yeah, I mean, I'm an economist myself, so I kind of
have
the same background, I mean, the main...
And what did you think about it when you first read it? The first impression?
I would say, I mean, it's groundbreaking and it's something new, but the one thing that's always the issue with economists across the history is that we have great ideas, but rarely we find the right way to implement them. Or we can provide these ideas, but it's not a way of implementing them. But I also want to kind of break with these just build it and bring it to reality.
Yeah, I think it's actually fascinating how decision markets and all these things, and even prediction markets by Robin Hanson, they were invented such a long time ago, like decades ago, basically, and only now is it really coming to fruition. And I think I just find that so fascinating how there's this one guy who, who's responsible for all these new groundbreaking ideas, including even the AMM.
Yeah, but also maybe to add on this and to... I think the idea everybody who's building startups knows this. Like having the idea is the one part, but then actually executing it is a completely different story. So, I mean, credit where credit is due, but also credit to the people trying to bring these ideas to life.
Absolutely. Like, I think we're gonna see many implementations. With prediction markets, I think the prediction market itself is a very good idea, but for example, for resolution, that's where it gets really hard because, how do you resolve a prediction market? I think that's something that we really need to hammer a lot more.
One interesting point of view that I always had is like by resolving the markets, you're essentially defining the truth. So so that's the way how I put it. The person the oracle that is able to resolve prediction markets is essentially defining what truth is. Yeah. And I mean, this is kind of a critical point since you can't really give this power to one party alone. And it's like a very, I mean, with prediction markets, it's kind of more or less undisputable. I would say, since there's like an observable thing that many people can agree on. But there could be, for other areas where these markets could be implemented, it could be a lot more.
And how does a resolution happen for something like bench?
We solve this through a subjective. We make it clear that it's a subjective solution by the market creator that is in the end also paying for the information.
It's
like putting a bounty on the information, so you should have access and kind of control what provided
very
the most
interesting.
value.
And Do you have any hot takes about MetaDAO or about decision markets in general? Like, do you think decision markets can actually be? Let's just not even talk about MetaDAO, but just decision markets themselves. Do you think they can give society a better way to actually make decisions, not just in an advisory role, but somewhere where it's not, with actual impact and scale?
I think I can answer both questions in one.
Let's do it.
Which is, obviously I'm very bullish on decision markets, and I obviously believe that it's like that they can provide additional value. In terms of MetaDAO, what makes me the most bullish about MetaDAO, and I think it should be the case for any startup, is the founder. And I think Profit has everything it takes to bring them to life and make them a reality. So this is kind of my take. Like, I don't need to focus on the product too much and every little detail of the product itself, but I know that this guy is gonna make it in a way, whatever. Yeah, and he finds the way or the right implementation of them. Over time.
How cool would it be to just have, like, in the future, I can imagine these organizations running on market information. So, like, some decisions are sourced out to decision markets, other ones are sourced out to something like Bench, where it's only an advisory role. And so I think at the end of the day, we're just going to end up with a lot better decision making and better companies, better structures, better society, and it's just a net positive for humanity.
Yes, maybe as final sentence to this as well, I think the way we achieve this, the end goal is then a more efficient world, or like a more efficient processes of running things. And as you said, I think there's multiple companies that can work towards providing this. And capital is the most efficient way how we trade between each other, and therefore also how we make decisions in real life.
I think that was it for this segment. Thank you, Erik, for coming on today.
Thank you for listening, and
see you around.
See you around. Bye bye.
GM, everyone.
Do we have anybody after this? All right, and next up we have
Sora.
our boy Sora.
I don't get a chair.
You don't get the cock chair. I already have the cock chair, so you don't get it. So we have Sora here from Jurassic Finance, and to be honest, I just want to ask you about your experience raising a MetaDAO, like, and specifically, what was the moment that you got MetaDAO pilled? Like,
The moment
how did you,
personally.
you personally. We're talking about personal shit here. So I want to know, did Wukong convince you to raise?
Wukong definitely convinced me. Like, I was definitely, hesitant at first.
Yeah.
I didn't wish, because, it did seem like it. Like, oh, I gotta raise proposal every time I want to do this. Oh, I got, only 50%. I can't tokenize less, blah, blah. But then, I don't know, in the end, it all just made sense, because we just raised everything we needed, and not more than that. And then we keep hearing, like, oh, but having to do a future key vote before every spending makes no sense. It doesn't give you competitive advantage, blah, blah, blah. But then I'm thinking about it like, okay, but that's like you, because we communicated everything clearly at the start. That's like you raising money first without telling anything to your investors, and then having to convince them later, like, oh yeah, this is actually where we're gonna use the money. And then maybe they don't want that, so they want to take the money back, but they can't, right? So then with MetaDAO, we communicated clearly. We said like, okay, this is gonna be the first proposal, this is gonna be the second proposal, and like people knew that before the raise. So naturally, every single proposal we expect to pass, because that's clearly communicated since the start.
And it's like, if you're taking money from the internet, from anonymous people who you don't know.
Then, and if you're giving money to anonymous people you don't know, you want to have like the anti-rug protection. But
I think that's a beautiful part about it.
I think, like, I would say the only thing that maybe I didn't think about it clear enough, is that you can like tokenize less or something like that. So because like our evaluation is pretty low right now, but let's say we do three dinosaurs, and then we will have like 5 million in assets. But if people don't buy the token, then our valuation is still in 1 million. So if someone wants to do an OTC deal, it does it based on the evolution of the token and not the company itself.
Yeah.
Of course, we wouldn't accept that, but that kind of limits us with further raises. So that's my only like maybe I didn't think about it enough.
I think you just have to think about it a little bit more because it's definitely
maybe blow my mind right now. Like what's the fix for that?
like could you phrase again like what the exact problem is?
Okay, so the least amount possible I can tokenize is 38.8%, right?
So yeah, you're tokenized 38.8%. Yeah, basically,
right.
yeah.
Okay, so now let's say we're a company, we're tokenizing assets. We raise 3 times outside, but MetaDAO entity still has the management with those assets.
Yes.
So Jurassic Finance is managing.
So you raise for the SPVs essentially.
Yeah, for the SPVs. So we have SPVs that are like 5 million.
Okay.
And then technically speaking, the company's evaluation should rise like at least half of that.
Well, the company's valuation should rise according to the revenue received from those raises.
Yeah. So like
not.
Let's say we do 5 and we take some fee, we make it of liquidity, so it's like half of that. But then if the token doesn't follow that, if the market doesn't follow it, people don't buy it because it's a separate raise. It's a separate raise.
No, the way that it works, or the way, like, I think it's similar in how equities have worked, where, like, let's say you get a $500,000 revenue from 1 year,
Okay.
and let's say you raise at a 400K valuation, which is basically what Jurassic raised at, if I'm not mistaken.
516. Yeah.
So you have a 500,000 valuation, and you just made 500,000 in a year. Now, that means that the token will people will realize that this is a profitable company, and they will start buying up the supply on the open market, which will drive up the market price, and it will just find the fair value of the company or the projected fair value of the company at a certain multiple. So let's just say, like a lot of tech companies, trade at big multiples, like some of them even 30x multiples to revenue. So
what's the reason? What's the reason behind not being able to tokenize less? I'm just curious about that.
What do you mean not being able to tokenize? Like you would want to tokenize?
So I take the max performance package is 50%. Right?
Yeah.
And then I want to, something goes to liquidity. So the minimum you have to tokenize is 38%. Like I cannot go and say like,
but you can
I want
always,
to tokenize 10% of my company.
You can always dilute in a way where you end up with that.
Yeah, but that would mean that I would have to mint extra tokens for the performance package.
But
has anyone ever done that?
You can do anything. Like you can definitely, like you can mint additional tokens.
All right, spam 1 in chat if you would allow a proposal that says mint extra 20% of the tokens for team performance package.
But that's not, like you can just do that. Like the way that I imagine that this would work is once you, okay, what is the reason you need more tokens?
To raise more if we needed some more, to extend more operations.
But the way you do that is you raise a proposal where you mint new tokens, just like Umbra did.
But then our percentage is less.
But you can just amend that in the proposal.
I mean, what? So like mint extra for the OTC and mint more for the performance package. Has anyone ever done that?
Nobody's ever done that, but that doesn't mean it cannot be done.
Yeah, I mean, we're not gonna do that because we don't need any extra money, and SPVs are gonna make. But that's my train of thought.
The way, like, you're kind of right that it hasn't happened before, but you can definitely do that. Like,
yeah, why would the market decide that? Because like then you just don't.
If you're a good founder, the market will reward you.
That's true. That's true.
So let's just say you raise, you dilute yourself with a proposal, right? And you raise, I don't know, 10% of your token supply, and you over the counter to a VC.
Yeah.
Later, when you reach the certain price valuations, and let's say you hit that, you can just put up a proposal to mint extra at the next price evaluation. I mean, it is just, you're just requesting more allocation, and the market will give it to you. Like if you're running a successful company, it is very much expected that you would want to own, a piece
more
of it.
Yeah.
And the market will let you do that. Like if Jurassic becomes like a super big company.
You're 100% right. I don't want it to sound like I'm a problem with MetaDAO. I probably haven't thought about it enough, but this is my like when I think about like okay maybe some bad things about MetaDAO, this kind of my train of thought. But other than that, everything's perfect.
It's definitely not perfect.
No, I mean the raise-wise.
It's definitely not perfect, but I think a lot of the MetaDAO stuff, you just have to think about it for like.
I mean, MetaDAO still mogs the others.
Yeah, exactly. And it's gonna change, and
it's the best one. Yeah.
Yeah, exactly.
Yeah. We're gonna change. Yeah, just quick update. Just Jurassic. our legal team is working hard. We're going to have the SPV opened in the next few weeks. Then after that, we're going to finalize the offer for the dinosaur, NDA yet. And yeah, expect it in the next few weeks. Voila. It's legal, but the legal team is killing it. I love it.
All right. Thank you, Sora, for coming in today.
Yeah.
I'll talk to you soon. Come on over here. And next up, we have somebody special. We have Doqo here from Solflare Dojo. So could you tell us a little bit about what you do at Solflare Dojo and what even Solflare Dojo
What
is?
is the dojo?
Yeah, what is the dojo?
Yeah.
What is the dojo?
Dojo is starts like a working group under software. It's like a mentorship program or something like that for the selected guardians. You know. Nowadays, dojo is like a small business under software community. We just do clips.
You can talk a little louder.
We just do clipping things and internship and something like that and other stuff for individuals and businesses. So that's all. And for the main account and for the community account
nice.
as well. Yeah.
That's awesome. Have you heard about MetaDAO? Or have you ever dug deep into what ownership coins are? Or
Yeah.
really?
Yeah, and I love it, but I'm too noob for it. Honestly. Yeah.
Like, do you participate in like ICOs usually?
Just for the Ranger
Yeah.
and
You got
for
liquidation.
sure for the dinos.
Yeah. Did you participate in the Dino ones?
Yeah.
Oh, nice. I think the beautiful thing about ownership coins is that you really don't need to understand them that much.
Yeah.
Because they act.
And it works.
Yeah, and it just
It works all on.
Yeah, it just works. You don't even have to think about it. Like, people will make the decisions for you. The markets will make the decisions for you. So it's a very much the ideal type of token that you want.
Which type of token?
It's an ideal way of token because like the markets decide on things. You don't need to participate. You can just let everything happen. If that makes sense. I don't know if that makes sense. Maybe that doesn't.
Yeah. Rather, my mind is, it's too noisy for me. It's different, and my brain is drop the chain.
Yeah, most definitely. Yeah, so I would love to. I think MetaDAO needs to cater a little bit more towards people like you who don't who feel like they're too noobs to understand it. What is it that makes you feel like it's not enough? Or do you find it complicated?
Honestly, I'm not. It's not complicated. I'm just lazy. I was just lazy, and that's all. Because I have a lot of jobs and other stuff. So
what would make you look deeper into it? What would I have to do?
I have no idea.
What would I have to do?
Thanks you so much for the opportunity.
Yeah.
But I will go the other place. So have a good day, guys, and peace and love to everyone.
Thank you, Doqo. Thank you.
Ciao.
All right. So in the meantime, I don't know if we're gonna have any more guests at the moment. We might or we might not. Vukan out there is, searching for a couple specimens to get me to interview. In the meantime, I'll just fill up the time and talk about ownership coins and just share some thoughts. Okay, 1 more minute and we got the next guest. So until then, you guys got me, and you guys only got me. So you're stuck. You're stuck with me for now. Yeah, so I think it's been super interesting hearing everybody talk about ownership coins here at Solana Summit Berlin. I think
This is gonna be difficult.
Oh shit! I'm ready. Yes. Yeah, you can just come here. So we got a chief skeptic. Hey man, how you doing?
How are you doing, man?
So we got Vidor from Solflare. Vidor is quite skeptical about ownership coins. And to be honest, I'm not here to debate about that. I just want to hear you out on what your thoughts are or what your concerns are about ownership coins.
So, I've ran a few businesses in my life,
Okay.
and most of running the business relies on you being like very diligent, you being very responsible, you being very sort of forthcoming, and sometimes you need to like do stupid shit to succeed. And when you're a sort of a very early stage company that tends to behave as a public company with like a public forum, shareholding, like over controls, sometimes founders don't get that freedom to do shit because the collective consciousness of the token holders will not permit ways to do it. What was the company that was it FedEx that the guy took the last $10,000?
I'm not familiar with, sorry, but it might have been that.
Flew to Vegas and then saved the company. Maybe FedEx should have been liquidated back then.
I mean, who knows? It is possible, right? It is definitely possible. So your biggest issue is that you think that it doesn't allow major pivots or these brave or
I agree. It allows for a structure of like really straightforward execution. So do what you're committed to, but business never is like linear.
Yeah,
like business is like
definitely
all over.
Yeah.
And then the second piece of it is probably the biggest misalignment of incentives in early stage, because when someone, or at least the sentiment of investors that are closer to crypto, everyone is looking for fast returns.
Okay.
And I don't think it's like 100% true. We only the most sophisticated investors.
Do you think that can change over time? Or is it just a human condition?
Look, I think there's a really good reason why something like an accredited investor status exists.
Okay.
If you're going into something on like something that's like essentially like super high risk, there needs to be proper friction.
Okay.
You clicking two buttons and funding something with USDC is not friction.
Okay.
But you essentially, through ownership, an ownership like platform, expect the same rights as like a proper shareholder, right?
Okay.
So the expectations of low friction, early stage, non-sophisticated investors are very different than what the founders think. So I'm mostly sort of driving towards
so do you think
buybacks. Like,
so you favor buybacks instead of this ownership structure?
No, I think buybacks are a very bad mechanism to give back to shareholders in an early stage, and I think most of the ownership structure companies like push hard for buybacks.
Oh, that I mean, I would frame it as refunds. Would you still hold that opinion if we framed it that way? Because essentially that's what's happening.
But like if you
is you're refunding part of the raise, it's a partial liquidation.
But are you buying back tokens from the market?
Yes.
Are you buying the tokens back from a fair market? Like
what define fair market?
Like an AMM.
I mean, yeah. From the open market.
Look, I think either way, like let's say you invested 100 grand into something, and then let's say the team has some very early traction, and they say, okay, look, I earned some money, I could probably allocate 50,000 of those dollars to refund a part of your investment.
Yes.
Still, I believe that capital is not well used to refunding when you manage to get the traction to get to that revenue where you can probably need to like put more fuel to the fire.
Yeah, but I think one of the beauties of the ownership structure is like activating a refund is just as easy as raising more. So you have the opportunity to raise that additional money just as easily as you have. But you can do the buybacks.
But is activating this refund to the discretion of the founders, or can the community vote? Okay, let's do refunds.
It's up to the market.
So that means
it's not. I would not say it like the community votes.
The token holder votes.
Not really. It's the market because it's a decision market. So whichever. When it comes to decision market, the decision that makes the price higher is the decision that's going to be made. The decision that makes the company more valuable is the decision that's going to be made.
The saddest point in some of the biggest companies is when they started paying out dividends, because that was undeniable proof that they cannot viably reinvest into growth.
Yeah, I agree.
And this is paying dividends before going public.
But it's not dividend.
Well, but the mechanism is same.
It's the same.
You are giving up a part of your revenue that you could invest in further growth to satisfy your investors.
Yeah, but the reason why you're giving back part of the raised funds is because the market thinks that you don't have a product. Like there's no demand for the product. And if there's no demand for the product, then isn't that a sign for the company, or do you think that's not?
Well, I think in an ideal world that works, but
Okay.
there's always massive information asymmetry if you are running the product versus someone thinking that you have a future market.
Okay.
So
Do you think we can make it work, or is the mechanism flawed from the bottom up? Like, okay, here's a better question.
extreme transparency is possible.
Okay.
And I think extreme transparency could lead to collective right decision making. But is it practically possible? I think it's very hard. Because I think it's very hard.
Do you believe that tokens can be valuable, or are you more on the side of let's just make equity the default way to raise money and run a company? Or do you think that there are benefits from having a proper token?
I think equity should be tokenized, and I do believe in tokenizing equity.
Okay.
It's just a question of, are we tokenizing very early stage pre-idea, pre-product, pre-revenue equity, or are we tokenizing a sustainable business equity? Because
Okay.
I think the two of them are very different. And
Okay.
if
I think
we,
that's fair.
Yeah.
I think that's fair.
I think tokenizing something of a later stage makes much more sense than tokenizing something before, because there's a lot of unknowns. Like there's a lot of unknowns before something becomes at least becomes a viable business.
So you're not for tokenizing early stage companies. So
Correct.
is that a way of saying that whatever structure we have with the safe warrants and all these kinds of, do you find that is enough at the moment?
It really depends what you are trying to do and who your investors are.
Okay.
If you're a sort of reputable founder or repeat founder and you're raising from reputable investors, we have like 50 years of history where stuff like that works. But if some of those two, if you're either raising from less sophisticated investors or you're like a less sophisticated early stage founder, then obviously proper protections could help the situation more.
Yeah, I think the problem with safes and a lot of these investment contracts is that they don't really give too many protections to investors. Like there are some, but it's very limited.
But it's also important to like evaluate the broader context on when who signs these safe notes.
Okay.
So it's there's a reason why it's called a simple agreement for future equity.
Yes.
You could obviously draft a complex agreement for future equity, right?
Yes.
But I think it's an essence of speed. Because if you're a VC, you have $100 million. You need to like in a year deploy or 2 years deploy in 100 companies $100 million each.
Yeah.
And if you would sort of go and like define warrants for every possible scenario of every outcome for every company, then it would defeat the purpose. You wouldn't be a venture capitalist. You would be like a private equity investor.
Okay, got it. So, do you think there's anything to gain from like a global investor pool? So, or is there no? Are you totally against like retail investing?
No, there are some amazing examples of retail investing. For example, Revolut's crowdsource round.
Yeah.
That's a great example. A lot of people, or honestly, I don't know if they made money.
I mean,
did they have the opportunity to exit those positions?
it was a great opportunity for them, and I think they probably can. Like, if you hold that position, you can probably exit it.
Yeah. Well, if Revolut gives you the opportunity to exit it.
Yeah.
Also, I think N26 had something similar. So for specific businesses that are heavily reliant on community and that who are looking for more deeper alignment with the product that they're using, it makes sense, right? It might make sense. It does make sense for every business.
It doesn't make sense for.
Yeah.
Okay, so what are some businesses that you think would be a good fit for maybe an ownership coin or something like along those lines?
So I think I might be sort of generalizing, but I don't think B2B businesses could be viable for sort of like massive retail investment opportunities.
Okay.
Because
you don't get the users.
You don't get the distribution, you don't get the users. You maybe just get a few clients, and even if you're in a B2B business, it's like scary if you just have a few. Whenever you want to sort of like try building a community, try building some culture, like a cult around the product, then I would say in general it makes sense to have community alignment, or at least a community alignment. I think a good example for this is, it started out as a good example, it didn't end up as a good example, is Tensor.
Oh, yeah.
They had like 50 investors, like everyone from the community invested in them, and everyone stood behind them when they raised money. But what happened after is a bit different.
I think ultimately, I think you have some very good insights here, but I think you're mainly arguing against not the specific structure of ownership coins, but the idea behind them, if that makes sense.
No, I'm
so like, okay, let me tell you why. So the problem that ownership coins solve is for a broader range of people, so that includes retail, venture capital, to participate in a trust in a raise with low trust. And do you agree with that? That to make such raise possible, like no KYC, permissionless, over the internet, like you need some mechanism to protect the treasury. So you will need, for example, decision markets to govern that treasury if you accept that this is a problem. Or do you think there could be another mechanism that
I believe in two things. I believe
solve this problem.
I believe that investing is not for everyone.
Okay.
And we should not make investing available for everyone and provide every protection. And number two, I don't think running companies or raising capital is for everyone. And we should not principally allow everyone.
Okay.
And that's how, obviously with outliers, but this is how the industry has worked in the past, like whatever years.
So, okay.
If you have a great idea and you say, okay, I'm about to be a good founder, but no one trusts me, like let's try to crowdfund, that might work, but then the inexperience of such a founder combined with the potential protections that are overly protective for the other side might result in a not optimal outcome.
But doesn't it make it easier, like for a founder? Let's say you have a platform like MetaDAO, where you can raise over the internet permissionlessly without trust. I, as a founder, want to get access to the largest pool of capital I can, the fastest in the fastest time, right? Now, a platform like that, it's reasonable to say that it attracts the most amount of capital because of all the protections. Do you agree with that?
Yeah, I agree with that, but at the same time,
and so that me as a founder, I get access to that large pool of capital very easily, and that's really the main selling point of ownership coins, is that they allow you to move fast and access a large pool, and they allow you to raise fast, but obviously you're gonna fail fast as well.
Yeah. I would say I agree. It's the biggest pool of capital, and obviously the biggest pool of capital yields the lowest friction to raise.
Yeah.
But at the same time, you might end up with some people you don't want on your cap table. That's a trade-off.
Yeah, that's the trade-off. So, okay, I think we can wrap up this segment. That was really good. I enjoyed that talk a lot. Thank you. Thanks, you for coming on.
Thanks,
it was really good. Thank you. Next up. Okay. Yeah. Hey, good people. Yes. Thank you. Come on, let's start. So, hey everybody, we got our next guest, Phillips from Crafts.
Hey.
So we're talking about, just for context for you, we're talking about ownership coins and capital raising structures and all these kinds of interesting things today. So first of all, how are you doing?
Good.
You're in Solana Summit Berlin.
It's an amazing event.
Yeah.
It's just, a lot of people. I didn't expect so many people to come here.
There's a lot of people here. Yeah.
Great to meet you finally, even with the mask.
Even with the mask. Yeah. I'll take it off after. And I'll show you my face.
Yeah, for sure.
But yeah, man. So we recently did an ownership report with Crafts. So I'm just wondering how you guys are doing. Like any news about how Crafts will move forward or anything like that. I'm super keen to hear, because I think you guys are a very interesting way to raise money, and I'm always up to like experimentation and to see how
I think overall, I think like the elephant in the room. Obviously, we had ReFi Hub. It's a race.
Yeah.
It hit like 251K in committed money in like the worst week of crypto in the last 2 years.
Yeah.
Obviously didn't hit the minimum.
Yeah.
Which was a bit of a bummer.
I was actually very surprised that it didn't hit. Like I was expecting you guys to probably hit that.
Yes, I think we did one core mistake.
Okay.
And that was like, I think it's a pretty great company. ReFi Hub is really great. I think the Solar RWA case. But the investor network that we have is mainly people that are investing in crypto and AI.
Yeah.
So it was very hard for them to underwrite the deal and price in the risk of solar origination in Singapore, because they don't have the expertise there.
Yeah.
So it's very hard for them to underwrite this deal.
Yeah.
So I think in the future we almost want to, with the liquid funds that we're in contact with, almost like anchor a deal already to 60-70% before it even goes live.
Yeah, I think there's I don't know who said this, but there was a saying that you have to get like some portion of the raise, and after that it's smooth sailing. Like maybe was it 1/3 or 2/3 of the raise?
Yeah,
I mean, you want to get that?
Yeah, I think so. Maybe I think it all depends on obviously the deal.
Yeah.
The awareness, and then like I think retail is very unpredictable, like public markets. So we want to focus more on professional investors.
Yeah, I think that's the right approach. Is overall, it's very hard to get retail to participate in a more sophisticated raise. Like ReFi Hub, to me, it was a very interesting company and something that I would invest in. and I think it's super cool. But I feel like, as you said, a lot of people might not know how to evaluate a company like that, especially if they're DeFi native or somewhere where they're more focused towards crypto and those types of products.
Yes, 100%. So on that side, 100%. And then overall, like I think it was good. Like we processed refunds like 20 minutes after it ended. So I think there's more trust. We got a lot of positive feedback on the tech side.
I'm very curious how the sealed bid auction went. Like, how did that go? Like, were you guys surprised on how that went, or just the mechanism itself, like seeing it live?
I think we haven't seen the true price discovery happening yet.
Okay.
Because there was not enough demand.
Okay.
Obviously, if you have like, let's say, a big range, then the market can price it fairly.
Okay.
But in this case, obviously, because it didn't hit the min, there's no price discovery in the secret auction.
Okay, that's fair. Yeah.
But yeah, I think in the test auctions we've seen a lot of people just bid at the middle of the range. Like there were a lot of bids there, and then towards the end of the range, so like max price. So that was interesting to see this develop.
And just, what does the game theory say there? Like, how do you expect it to work live? Like, do you think, like, I was thinking about it, like, aren't people just going to bid the largest number, or are people going to actually try to evaluate?
I think our goal was to like have a very structured process. That's why we gave the people like the data room, access to the financials to really price the asset. But I think in a sense, like if you really want price discovery to work, you almost need like content from outside people looking in or underwriters basically say, okay, this is like almost like what we have seen now with SpaceX, right? Like Morgan Stanley said, okay, they predict like $63 in like half a year because of short-term selling pressure. Almost like an underwriter looks at the data and how they will price it, and then you could have more educated bids.
Okay.
But yeah, with the focus on professional investors as well, I think that's where we see more price discovery happen.
Got it.
I think that's more on that. But besides that, I think what I'm really interested about is we talked a lot with institutions as well.
Okay.
And like how to approach like private market flows.
Okay.
And I think there's a lot of things like money market funds and other institutional use cases that could benefit a lot from instant on-chain settlement. So, and a lot of those require private transfers.
Okay.
I'm very bullish on Archeon, very bullish on Umbra, but also very bullish on like seeing how we can help institutions like bridge on-chain. For example, we talked recently with one big stablecoin issuer. So this is something that we explore more on the infrastructure side. And from our side, we're in talks now with more projects that the investors that we have in the network can actually underwrite. So there's like one AI company, there is one robotics company, there's one crypto.
I've been seeing a lot of hype happening around robotics companies.
Yeah, I mean, RoboStrategy was like everywhere.
Yeah,
and it's also like crypto guys basically.
Everybody pivoting to robotics.
I mean, I have some insider info here, but I'm not sure if this is the right place to drop it now. Basically, they got like allocation. They have been in around in figure and electronic very early on.
And do you think, like, what's next for crafts? Like, what are you guys planning on doing next? And when? Obviously, the market is pretty shitty right now, so
I think we're not pressured to do anything really quick. But more like look at the investor network, look at the mandates they have.
Just try to feel it out.
And their projects. And like set it up in a way where the whole process is structured. There's no rush, and we can actually help companies. Yeah.
All right. I think that's it for this segment. Thank you, Phyllis, for coming on.
Man.
Talk to you soon.
Hello.
Hey. We have
Aditya
from Superteam here to talk about all things ownership. So how you doing, man? First of all,
I'm good. How are you?
I'm doing good. I don't think we've met before. I made the Venus, but yeah. So have you explored MetaDAO at all? Like, have you?
Yeah, we've had a bunch of Superteam member projects.
If you could just talk a little louder so that the mic.
We've had a bunch of Superteam member projects raised on MetaDAO. So Umbra, Avicii, JurassicFi from the Balkans. Guys are all from Superteam.
Half of MetaDAO is just Superteam members.
Yeah, and it's amazing because what Superteam does is accelerate new startup formation on Solana. We find early stage founders who are promising but not yet proven, and sort of help them, get started, get them to a point where they get their pre-seed. And I think so far, Colosseum and Alliance have been great sources of early stage capital for our teams. And now MetaDAO is like a new addition. First with the main platform, with like the permission product, and now with the permissionless product for Tributary as well. I think a lot of super team countries don't have a local VC ecosystem, let alone a local crypto VC ecosystem. And so this is truly the manifestation of internet capital markets is when a team from anywhere in the world can just raise on Solana.
Are you like personally MetaDAO pilled fully, or is it just something that you've kind of just come around to because of the teams raising on MetaDAO, and
I think for me it was more the latter. Like when we saw our teams find success, they were like, okay, need to look at this more seriously. And I think I do appreciate the legal innovation the team has done to figure out how you can set up an entity and then have like, where like the DAO owns the treasury, and then you have some governance around it, and you put some ownership coins, you put some, investor protection into the coins to some extent. So I think that's cool. I still think there's some concerns to work through, like, can you have early stage founders on a stipend? Can you have a group vote on early stage company decision making? Like new companies are effectively supposed to be contrarian bets. And so those things still need to be worked out, and I think they will be worked out in production.
Like it's always
we sort of figure out as it goes, but I think it's a great attempt, and I'm eager to learn more about it.
Have you had any feedback from the teams that have raised there about this exact thing you're talking about, where they don't have this freedom? Like, was that something that they told you first?
No, they didn't. So far, so good. I mean, I've not heard from any of them for this to be a practical problem so far. And so maybe it's a question of time scale. Maybe it's a non-problem. I don't know.
And how do you see Superteam participating in this whole fundraising ecosystem within internet capital markets? Because like so far, it's been very hard, I think, to stand behind a launchpad, a token launchpad, which allows people to raise money, because it's just, like, let's be honest, like a pump fund coin is just not a good investment vehicle at all. And so it's very hard to recommend a team to do like a pump fund coin or something like that. And it feels like MetaDAO has finally made it so that you can recommend a team go this token route instead of an equity route. Do you see this evolving into that? Like a super team, like recommending teams from Superteam to raise on MetaDAO because of this?
So I'd say two things to that. One is that, Pump Fund also, for all its challenges, has an insane amount of traction. And so recently they had their own hackathon, and they invested in a whole bunch of teams that launched tokens. And so they're also trying to, add more use cases around the distribution they have. So I wouldn't dismiss that entirely. Would we recommend teams to go on MetaDAO? Look, ultimately, like, these are founders, right? So they have to do what's best for themselves and their company. We just show them examples of what has worked and be like, hey, these projects from here have raised here. We also are in touch with like the team. So Mista from MetaDAO, shout out Mista if he's listening.
Shout out to Mista.
has spoken to the leads. He receives team recommendations that we say, hey, there's a strong team, you should look at it. And so we'd absolutely pass on recommendations of founders who are raising to every avenue that's available. And then it's up to the investor, the platform, and the founder to decide how they want to proceed.
I think the recent Jurassic raise, I think, was when it clicked for a lot of people. Like especially inside Superteam and probably Solana Foundation and all that, where it's like, you can actually raise money through the internet in this way, and you can get a way oversubscribed raise, even if you're somebody like, like Vulcan or Sora, like just guys from the Balkans, Superteam Balkan,
I think it was a great example for the permissionless launchpad, and I hope there's many more successful companies, and it's a great product.
Okay, I think that's it for this segment.
Right.
Thank you for joining me today.
Thank you. Thanks for having me.
Thank you. Okay, guys. I believe that is it for today. We had a bunch of exciting guests on here today to talk about everything ownership. And I urge all of you to follow us on Twitter, visit all of our social media platforms on YouTube, Instagram, TikTok, all of it. We got all of it, boys and girls also. Yeah, I think that's it for today. And I hope to talk to you guys soon. And special thanks to Vukan for helping us. Sir, what's your handle? I'm a big penis, if anybody doesn't know. Shout out to everybody tuning in today. Shout out to Vukan. And I'll see you guys soon.
Thank you everyone for coming.
Goodbye.
Okay.